Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Well, hi there and welcome to the ISC FX Options Weekly Outlook for November 16th, 2009. As always, I'm Jason Ayres of OptionSource.net. Let's take a look at our weekly chart of the US dollar index. Now, the trend in force continues to be to the downside, and although the dollar index closed the week negative, the 75 supports continues to hold. However, a break below is likely to yield a test into this 73-74 focal zone. Now, to the upside, the 76-77 range is an important resistance level. A reverse move on the upside and a break of which would likely give us more confidence in a more robust US dollar reversal. That break would open the window for a move towards the 78-79 box. Now, on our daily snapshot, we see a reflection more clearly of the importance of the 75 support. In the short term, a break above 75.5 is likely to follow through with a test of 76.5. Next up, the CDD, the U.S. versus the Canadian dollar. Now, the U.S. dollar lost some ground against the Canadian dollar with a retracement back down towards 104. The CDD ended up the week with a bounce. However, there is some hesitation at this 105 range. A rejection here opens the window for a retest of the recent lows. A break above 105.5 should yield a move up into this 107, 108 focal zone. Let's take a look at the YUK, the US versus the Japanese yen. Now, the YUK pulled back to test support at this 89, 89.5 range, which is a key retracement zone on the downside. A break below this could signal further US dollar weakness against the yen, with the 88 box as our first target to the downside. It does appear as though a declining wedge has formed, which traditionally precedes a move to the upside. A break above 90 should follow through with a move into this 91.5, 92 focal zone. Well, the U.S. dollar continues to respect the downtrend that it has been in against the euro. However, we may be seeing a bottoming process taking place as the 66.5 support level is tested and holds for the second time. Now, there is an important overhead resistance at 67.5, and we may see a rejection here that results in a third test of this support level. A break of that level represents also a move through the downtrend line. However, there is not much room before the pair value hits resistance at 68. Now, a break beyond 68 would lend further credibility to a US dollar reversal against the euro. Well, the US dollar bulls can't seem to take control against the pound as the BPX tests support at the 59.5-60 focal zone once again. Now, a break below 59.5 opens the window for further dollar weakness, with the 57 box being a logical first target to the downside. If the BPX bounces, there is an important overhead resistance at 61, a break of which should yield a test of that 63, 63.5 focal zone. We need to see a break of 63.5 to lend further credibility to any bigger picture US dollar strengthening. Well, the US dollar continues to slide against the Australian dollar, as seen here in the ISC FX options pair value AUX, and there really are no real signs of a reversal. The 106-107 focal zone is an important support. A break below is likely to see an extended move down to test 104. If the AUX holds here, a bounce and subsequent break of 109 should carry through to test the 111-112 focal zone. A close above 112 opens the window for a more robust US dollar strengthening. Let's take a look at a few of our key points. First of all, the US dollar index bounced at 75 but continues to show signs of indecision. This may be a part of the bottoming process. However, the trend still remains down. The CDD retraced back to 104 and bounced. This is an important retracement level. A break above 105.5 opens the window for a retest of the 107-108 focal zone. The YUK pulled back, retesting an important retracement zone. A break back above 90 should signal a retest of resistance at 92. The EUI retested a key support, which could be part of the bottoming process. The major trend continues to be down. However, a close above 67.5 signals a break of the trend line and opens the window for a more robust rally for the U.S. dollar. The BPX continues to test support at the 59.5-60 focal zone and has been consolidating within 59.5-61 for quite some time. Although the downtrend momentum is tapering, we can't rule out another leg lower. The AUX continued to descend, failing to break the major trend line. The pair value is now retesting support at 107. A bounce and break above 108.5 opens the window for a retest of 111, 112. And this has been your ISE FX Options Weekly Outlook for November 16th, 2009. As always, I'm Jason Ayres of OptionSource.net. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionSource.net member. Visit www.optionsource.net. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.